Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Tim Harrison, who is Head of Wealth Management at Linear Investments. Good morning to you, Tim. Are you well?
Good morning, Matthew. Good morning. Yes, it's Merger Monday, or is it? So a bit of a bright start to the week from the M&A front. A couple of companies reporting some good data and some not so much.
Starting off with a bit of M&A, so you've got Spire, approached by Mediclinic, 30% premium to Friday's close, but being rebuffed by Spire, told to go away. Are we going to see more M&A in the coming months, do you think?
Well, it was interesting because it's a story that's not been particularly sort of covert, so to speak. It's been around for some time, bumbling along. And these sorts of things, historically, if there is no smoke without fire. And you've seen obviously the offer come through over the weekend or announced this morning, and Spire rejecting the approach. Now it'd be interesting to see whether or not Mediclinic come back with a slightly more impressive offer, or another party comes and joins the party, or whether they all just stand back and let Spire crack on. Any which way, obviously healthcare is an interesting sector, interesting space, and watch this space.
Understood. And it feels kind of M&A, it's in the technology sector, in the medical sector, etc., in the consumer retail as well. Other areas, though, I mean, industries, we've seen a profit warning this morning from Pendragon, the automobile car sales showroom company. And it feels, car business isn't doing that well, and there's issues regarding debt and bubbles, and you look at diesel cars, you look at electric cars on the horizon, etc. Is that a sector really that's out of favour, and for good reason?
Well, it's interesting because everyone's been reporting over the past number of months how new car sales have been slowing down. So the fact that they've reported a profit warning, you would have thought that investors would have taken heed from what's already out in the press and shied away from these. I mean, it's a pretty dramatic downturn today. I think about 16-17%, something around that figure. But again, new car sales, everyone seems to be on this the credit bubble, if you like, with these new cars. And it is arguably another bubble, and there is questions over whether or not people have been missold the opportunity, if you like, to buy a car on finance. So it's a case of watch this space, but it would appear that all the automobile makers are all struggling as well on the back of the diesel emissions scandal, etc. So it's one for me to stand away from and wait for the opportunity to buy or not.
And looking at the house build as well, I'm not necessarily saying there's a bubble, but Javid today, let's borrow to build homes. This is the community secretary, really kind of pushing Philip Hammond into forcing him to maybe drop stamp duty or push money into the house builder sector. We've spoken before about the UK house builders and how they have been performing very well. Do you see this as another uplift? Could this put a bid under the new homes market?
Well, it's an interesting dynamic because it would appear that they are trying everything and anything to get the house builders to build more, and also supporting the new home buyers, etc., with the help to buy, etc., etc. Now, there's an interesting article over the weekend in the press with regards to Persimmon and how well they've done over the past 12 months, really on the back of the new the help to buy scheme. Now, again, you've got a limited amount of stock on the market. So there is obviously a pent-up demand for new homes. That's clear. But again, it's a case of can they build it quick enough to meet that demand? Quite obviously not. So again, it's a very interesting space to be long. But again, I would be fearful of a bubble, because if you do see rates rise, etc., then the bricks could come tumbling down quite quickly.
Understood.
No pun intended.
Indeed, and looking forward to this week, we've already touched on kind of a bit of an M&A coming out on Monday. Macro-wise, it feels a bit light. I mean, we've got the ECB and we've got the US GDP numbers due at the end of the week, but in between that, not a very exciting week. Well, what can investors look for or expect this week potentially?
Well, again, I think it's going to be quiet in terms of the whole landscape for the next few days until the back end of the week, when you see, as you mentioned, the ECB, US GDP, etc. And those are two real data points to get your teeth into as a trader. As an investor, obviously the markets are sort of, I'd say, reasonably quiet. That being said, there is obviously demand for companies where there is the structural element, the likes of GKN, obviously a report over the weekend that they may be looking to sort of split the company in two. There is the question over GlaxoSmithKline again, with the new lady at the helm has already said that she's not interested in splitting it up, but potentially going on the acquisition trail there to boost their growth. So there's a lot of company specifics to look out for. And again, if you are seeing these sorts of companies warn on profits, it's a case of at what stage do you buy. As we mentioned last week, with Pendragon, is it worth a buy at some point? Personally, not for me. But again, with the likes of the Spire Healthcare and the M&A on areas that are less attractive or less sexy, less interesting, if you like, there's still plenty of optimism to grab hold of.
Fantastic. Well, on that positive note, Tim Harrison, Head of Wealth at Linear Investments, thank you very much for joining us today.
Thank you.